Good morning, Mark Soderberg with ADM Investor Services with your morning ag market outlook for Wednesday, February the 5th. Well, mixed two-sided trade here overnight. Corn prices, wheat prices are currently higher while the soybean complex is just slightly lower. Corn is sitting near session highs, up 3 to 4 cents, while wheat is up between 5 and 7 cents. Beans right now down 1 to 2. Meal is just off less than $1, while bean oil is down about 50 points. Speculative traders were healthy buyers across the ag space yesterday for the second consecutive session. We had them buying about 11,000 contracts of both corn and beans, 4,000 wheat and bean oil, while nearly 8,000 contracts in the meal. The speculative long position in corn is now likely approaching 385,000 contracts, nearly 80,000 in the beans. Still a big short in Chicago wheat at about 95,000 contracts, while the meal short now is down to about 42,000 contracts. Open interest was higher across the board with the exception of Chicago wheat, which was steady, and Kansas City, where it did fall about 2,000 contracts. It does not appear that President Trump and Chinese leader Yi spoke late yesterday, so as it stands right now, China's retaliatory tariffs of 10% on crude oil, agricultural machinery, and vehicles, and 15% on coal and liquefied gas will start on February the 10th. Markets will continue to trade from one tariff headline to the next. Bulls remain hopeful, however, that a trade deal is in the works, followed by a pickup in Chinese demand. Rains have started to fill in over some of the drier areas of Argentina overnight, including southern Cordoba and Santa Fe, along with the northern half of Buenos Aires. Southern half of Buenos Aires has so far missed out on meaningful rain. Attention will now shift to central and northern growing regions of that country, where a hot, dry pattern is likely to set up now and stretch into the middle part of the month. I'd expect the USDA to come in with slightly lower corn and soybean production estimates in next Tuesday's WASDE's report. In Brazil, farmers in west central and northern growing regions will continue to have to work around rate events, keeping soybean harvest slow and the second corn plantings also at a delayed pace. Delays in the soybean harvest would certainly help open the door for additional U.S. demand. Rio Grande do Sul in the deep south also braces for a hot, dry stretch, which will likely start to cause some stress on crops. The EIA will be out later this morning with its weekly ethanol production, which is expected to show a little bit of a rebound from last week's weather-reduced 298 million gallon pace. Fresh 9-month high in March corn overnight as it pushes closer to the $5 level. 508 is the next key resistance above the market, that the high from last May. Fresh 4-month highs in March beans overnight before pulling back a little bit. Next resistance there is the September high of $11. Brazil's basis has recovered a bit given the slow pace to harvest. Inside trade for March meal overnight with next resistance at the December high at 321.60. Inside trade for March oil, perhaps feeling a little bit of spillover pressure from weaker energy prices. And also a three-month high in March Chicago wheat, while March KC has climbed above the $6 level for the first time since October. All this despite China claiming to have excess wheat inventories, prompting them to delay or resell up to 600,000 tons of imports to neighboring Asian countries. Thank you for listening, everyone. Have a great Wednesday.